Hello and welcome to another update video about XRP. The price is still holding here below the all-time high but above support. This is the 4-day chart, and you can see that here on this chart the price recently, specifically here on the 3rd of February, tested the support area and rallied. We had a good reaction, but we are now still holding below the previous swing high that formed in January at around $3.40. This will also be an important breakout point above. So it's the 330 to 340 area, which could provide some strong resistance. Above that area, we've got $4.19, $5, and $6.60 as next upside targets and resistances. So this is key, these next levels. We have to watch them, obviously. And important would be at this stage that the market doesn't break below $1.20 anymore, at least not from a, let's say, daily or 4-day chart point of view. This is important because any break below the $1.20 level will challenge the bullish thesis. It would basically be too deep for such a fourth wave. It's very, very important. And yeah, I mean, I mentioned to you that the market could spend quite some time actually in this range. So if we see this here as a range in which the market is moving, then it's defined between $1.20, which is obviously the lower boundary line of the lower support area, and I would say 350 or 340 or 420. So 340 or 420, depends on how much space you want to give it, but that would be a range. And I think it might spend quite some time in this range. We'll see. For now, at least there is no upside breakout signal. Let's take a look at the shorter time frame chart for XRP. And also here, you can see that at the moment the thesis is that a fourth wave pullback, and that's here on the larger time frame, this fourth wave possibly bottomed indeed on the 3rd of February. And so far, we have seen a good reaction, but it's not exactly impulsive. So that rally was not clearly a 5-wave move up. Also on many other crypto charts, we haven't really seen very clear 5-wave movements. Looks more like a 3-wave rally into the 3rd of February high or 4th of February high. Then we had a dip, which to me looks a little bit more like a 5-wave move down. But but I think it is probably corrective. It's overlapping anyway. And the price then rallied from there, but couldn't break above the 3rd of February high. So it's like a wave 1 to the upside, A wave down, B wave, and we could easily test the orange support area once more. And again, that support area is defined between $1.96 and $2.35. Very, very important support area, obviously, for upside continuation. Now that we've moved away from support, the risk is high, right? Because the market might easily test it again. The market also might usually it takes the market usually several attempts to really break out. So we can always get these fake outs, because it looks a bit like a fake out, especially in B waves. So quick explanation, if this decline was an A wave, then this could be a B wave, which can easily overshoot above the 3rd of February high. And we could still get another move down and then rally from there. Either way, whatever the microstructure is, we can speculate about that every single day, but what is really important is just that the bulls turn up before the price breaks below $1.96, because this is down here, the 78.6 retracement, and only a break below it would, let's say, reduce the likelihood for the bullish thesis here short term. For now, what is unclear is whether the market will test the support area again or not. I think it is quite likely, so I would at least prepare for it, and I cannot rule out, however, a direct breakout, but the microstructure just doesn't clearly suggest it. The proportions look a little bit strange, and the rally so far looks more like a 3-wave move, so it could just be this B wave. So just be prepared for that. If we break above the 3rd of February high at around $2.82, The next upside micro resistance is between $2.96 and $3.03. And above that level, we've got the 340 level. These are the next resistances. So we just have to see if the market can do something a bit more convincing. Because over the weekend, it's just been consolidating. So that's what we're watching for at the moment. There isn't much more to say at the moment. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, if you're interested in additional content, check out our MCO Global channel. It's our new channel. Here we talk about different things like geopolitical developments, in-depth Elliott wave analysis. There are some tutorials. Today I talked about some success factors that I use myself when I work on my business and myself and things like that. Just things that helped me along my journey. So maybe you can find some value in this. If that stuff interests you, also looking at gold, the NASDAQ, S&P 500, check out this channel. It's linked in the description. Thank you very much. Bye-bye.